Assalamualaikum and a very good day to all viewers out there. Welcome back to my channel. In today's presentation, I'm going to show you how to prepare a financial statement, which is the statement of financial position, statement of profit or loss, and other comprehensive income, and also statement of changes in equity, together with the notes to the property, plant and equipment for an incorporated entity. For an incorporated entity means we are talking about for a company. Okay, if you can see here, you have the trial balance of a company called Arfa Berhad. Arfa Berhad, or it's actually a listed a company which an incorporated entity. So Berhad can either be a listed company or an unlisted company, right? But this is an incorporated entity, and the year end is as at 31st of December 2019. So this will be your reporting date, or the date that you will prepare your financial statement. So you're given all the trial balances information here, the sales revenue. You can see all the items given, yeah, for your trial balance. That includes income, expenses, equity, assets, and liabilities, right? At the bottom of that, you have your additional information that give details about all those information that are available in your trial balance, right? So if you look at the requirement at the bottom here, you are asked to prepare the financial statements in accordance with the requirements of Companies Act 2016, which is the act that govern the companies incorporated in Malaysia, as well as Companies Acts also govern most of the companies that are incorporated in other countries as well. And together with Mfrs 101, so it should be in compliance with Mfrs 101, which is equal to the IAS 1 presentation of financial statement, and also other relevant Malaysian reporting standards. So Malaysian reporting standard is the MFRS, or Malaysian Financial Reporting Standard. And our standards here is also equivalent to the International Financial Reporting Standards. You're asked to prepare the statement of profit or loss and other comprehensive income, statement of changes in equity, and also a statement of financial position for that particular reporting period, 31st of December 2019, and to prepare also the notes on property, plant and equipment. So let's see, what should we do first? Okay, before you start, the first thing that you should do is always to classify. After you have identified the date of reporting, go and classify all those items that you have in your financial or your trial balance. So if you can see here, yeah, you can see that I put two color here. There are two colors, and what you do is first you need to go and see whether it goes to which statement. So you need to go and decide this first, right? You need to know that sales revenue, for example, are items in the SOPL, and cost of sales as well, distribution cost, admin expenses, dividend is an item which is an appropriation of your profits, right? Interest is an item that is normally going to be shown, interest on loan. This is the item which is in your statement of profit or loss, which is going to be your expenses, your bank balance. All these items are in the statement of a financial position. Your share capital should be in the statement of changes in equity. Those are all equity, so you should go and classify that first, right? So the same thing for your preference shares, revaluation reserve on, and also your retained earnings or retained profit. Tax paid, yeah, tax paid, this is actually your expense. It will be going to your SOPL later. But tax paid is actually the tax that were paid from last year. So we are going to go and check what are the estimation of the tax expense for this company. And you have the item here. These are all to be shown in the statement of financial position. That one is to decide which statement will you include. The next stage is to classify them. When I say classify, that means, for example, item like your sales revenue, right? Your sales revenue is going to be an income, cost of sale, expenses, and you can see what I've put the classification here. The dividend is an equity distribution. I put here EQ for equity, E for expenses. And those other items are also classified, right? For the share capital, yeah, that is an equity, right? Okay, so you can do this classification, do it, right? The loan is a non-current liability. These are non-current asset, right? Okay, you have that. Those are the classification. Do the classification so that you can see things better. After you have done that, which is doing the classification, what you need to do is to prepare the template. So if you prepare the template, I would suggest you to prepare together with the workings as well for the expenses part. So what you need to prepare is to prepare the template. This company is Arfa, right? So prepare the template without the figure. Just put the item first. Statement of profit or loss and other comprehensive income. Make sure you have the item or the title correct together with the right year end, right? And put those items like you used to come across: revenue, cost of sales, and those items that are peculiar to the statement of profit or loss. And then you also can open up your statement of changes in equity. Just put those items. You may not necessarily have those items in your information, but somehow this would help if you put the pro forma item in your template. After that, okay, all these little boxes that you have here, these are just some explanation that you can also refer later, right? You also have your statement of financial position that I've also prepared in the template. So you need to prepare first is your workings for your SOPL, then the SOPL itself, statement of profit or loss, then the statement of changes in equity, then the statement of financial position showing the non-current asset according to the whatever order, yeah, but that's not really important, but it's better to get a good practice. Current asset, right? I just put all those items first. Equity and liabilities, yeah, share capital and reserve. Share capital and reserve, the detail will be in the statement of changes in equity. And your non-current liabilities and all those other items. You can see that in the current asset section, I put also the accrued income and prepaid expenses because those are part of current asset as well. When the section on the current liabilities, I put accrued expenses and unearned income. Unearned income, or this is income that you receive but you have not yet earned. There is no such thing as prepaid income. Prepaid is just for expenses. This is income that you receive, or what you also call as deferred income, unearned or deferred income, or deferred revenue. Okay, after you have done that template, just make sure that you put them in the correct order so that easy for you to cross-refer. You should also prepare your template for the notes to the PPE because you are required to do so. So here, the notes to the PPE, the column will depend on what types of PPE that you have. But for a start, why not you put the items that should be in the cost of valuation section, yeah, if your assets are not shown at cost but are being shown at revaluation model, cost valuation, I put them, yeah, or valuation, and the accumulated depreciation, and of course the carrying value or the carrying amount. Just list down those items that you normally come across. If you don't have it later, that's not a problem, you just can put a dash. Okay, after you have done that, my suggestion is that you put first all those items or all those lists that you have in your trial balance to the template first. For example, these items of sales revenue. Items of sales revenue, right? Okay, I'm going to just use some simple color. Okay, I put some gray color here. Yeah, but it might not be that visible, so I always like yellow. So this sales revenue item should be put in your income statement or in the statement of profit or loss. So you need to go and check that sales revenue if there is any other information that you need to check. If there is none, what you're going to show will be what you have in the trial balance. Okay, it will be 2425 200. So that was for the sales revenue. Then after you have done that, you can go and do the transfer of the cost of sale. Okay, cost of sale will normally need to be adjusted. Why? Because sometimes it will have to be adjusted with some adjustment for write down of inventory. So if that is the case, you can just KIV that first, because in this question there are some writing down of inventories. So I will not put the figure here, because the figure that you are going to put here, cost of sale, yeah, you can just put in the workings here, the amount that was given in the trial balance. What was the amount? Go and check. 978750. You can put it here, 978750 as your working 750, and then you're going to go and find out what are the working. But at the moment, that is the working that you may have to add or minus. After you have done that, you can do everything, do all the posting, meaning that the distribution cost should be put in the working section, yes, but you need to also understand that distribution cost is here. Admin cost, the one that you have in the trial balance, should be put also in the part that you have in your question here. Okay, you can do that. Do all the transfer first. For example, dividend paid, go and put them in the statement of changes in equity, and this dividend paid refers actually to the dividend that were paid during the year, or what you call interim dividend. So that is actually interim dividend, that dividend paid that you have here, interim dividend. Okay, I just put this. Okay, so that should be put in the statement of changes in equity. Interest on loan, okay, interest on loan, this one you should go and put in your workings. So now your working section, you can also start having it here. So for example, I have already put the workings for you, which is, okay, you should have the working as per the trial balance. As per the trial balance means, if you can see here, okay, for the admin cost, what is the information as per the trial balance? As per the trial balance, it was 162,450. For the distribution cost was 133,750. And as you remember, interest is an so-called finance cost. So that interest also will have to be included in the working section. Don't go and put everything in your statement. So the one as per trial balance, the interest is how much? Just put there. Yeah, and that is 22,500, which is equal to the figure here. Okay, right. And then you have your item. You can do all that yourself. Dividend paid. This one should be in the statement of changes in equity. Yeah, statement of changes in equity. Let me just show you some sample. Okay, you can see your statement of changes in equity here. Your statement of changes in equity is somewhere near your statement of profit or loss. I put it at the bottom of it. Okay, here is the dividend, but dividend that you will include here is not just the dividend that you paid, but that is the dividend that you incurred during that current year. When we talk about dividend, this is referring to dividend expense. So you may have two types of dividend. One is interim dividends, and this must be the dividends that you declared from your equity share. Your equity share is your ordinary and preference shares. So if nothing is stated, you would assume interim dividends might be from both the total coming from ordinary and preference shares. So in our case, the dividend has been calculated and has been paid. Okay. Apart from that, you may also come across some company that will declare or propose dividend at the end of the year. So if the dividend were declared at the reporting date or somewhere before reporting date, right, and that is going to be a liability if that is being approved, right, by the board of directors, meaning that it was declared in the current year, but the payment will be made in the maybe in the following year. That is what you call final dividend that you will incur it at the end of the reporting date, before the reporting date, but somehow the payment will be made in the following reporting period. So these are going to be included here, right? The final proposed dividend. However, dividend coming from redeemable preference shares will not be included in the equity section, because a redeemable preference shares, to start with, it is not an equity shares. It is a non-current liability. So the dividend that you will include here is actually interim and final dividends or proposed dividend coming from ordinary and preference shares only, right? So that one you are going to include. So that one is just to explain those part on dividend that we have just come across on our trial balance. Okay, right. Okay, let's look at the rest. So do the work, go and do the posting, go and do for this, put them to the correct statement, right? Put them to the correct classification. This is the statement, this is the classification. So I put here class C for classification, and this is the S for statement, S and that one is what we are doing just now, S and C, statement to decide, and the classification, where is it to be classified. So after you have done that, all the classification, yeah, you have done, assuming you have done all that, put them in the correct statement. For example, let's say we talk about the one on notes on PPE. This item, freehold land, machinery, building, and motor vehicle, if you can see that figure, this is the figure that will be the starting point in your notes to the PPE. So let's say we go to the notes to the PPE, and we should put it here. We put the balance according to the types of PPE. And if you can see here, I've already prepared for you. The balance coming from the trial balance is the beginning balance. And the same thing should be done for your accumulated depreciation. Take the balance from the accumulated depreciation. So go and put the column for your freehold land, building, plant and machinery, and motor vehicle, because in this company they have this asset, right? How do I know? Because of the information given here. So I've already done this as well, right? Okay, the rest of the thing here is to be done in the statement of changes in equity. Okay, this one, this figure, yeah, I use orange here, right, will be included in the statement of changes in equity, and that is going to be the beginning balance. So beginning balance, I put here the title, if you can see. So that beginning balance, it was taken from the statement or the trial balance, from the trial balance. And after that, you can go and check all this later, right? But please put those items first, because that are actually free marks for you. Okay, if you have done that for your statement of changes in equity and the statement, and in your notes to the PPE, you can also do the same for your item that you have on your statement of financial position. Go and include those items first in your statement of financial position. If in case you come across adjustment, then only we will adjust. For example, loan from MARA is a non-current liability, right? Non-current liability. So that non-current liability will be included. Where to? It will be included in our statement of financial position under the non-current liability section. So this item like inventories, allowance for impairment are all items that will affect the current assets. So go and include the inventories there first, right? And then if there is a need for you to go and adjust inventory, you can do the adjustment later. For tax paid, you need to go and check the information to go and decide how much is going to be the amount to be recorded as an expense. Okay, but tax paid here means the one that were in the balances given in the company as at the beginning or as at before it is being finalized from the last year, tax paid from last year. Okay, last tax paid for the current year actually, and you pay as you earn based on our taxation system. Okay, after you have done that, let's do your statement of profit or loss. So as you do your statement of profit or loss, I start with statement of profit or loss. You go to and going to find your revenue, right? So revenue we take directly from the statement of profit or loss. Here is from the trial balance. Second one is your cost of sale. So when you have your cost of sale, before you start doing that, I would suggest also after you have put the revenue, go and check your information given. You have not yet checked any information given, assuming we have done all this transfer, right? We have done all the transfer to our item in our statement of financial position, statement of changes in equity, assuming we have done all that, right? Okay. The one that I put in orange is the one that I transferred to the statement of changes in equity. Okay, the one that I use here, the one in orange only. Okay, you have the information related to the PPE. So information number 1 is on purchase of PPE. Information number 2 is on land being revaluation. Yeah. Information number 3 is on the depreciation. So information number 1 is basically on MFRS 116. So what you need to do is, why not do the workings together? So when you do the workings, I've done the workings here in terms of the adjusting journal entry. Okay, these are the adjusting journal entry that you have. Adjusting journal entry, right? Adjusting journal entry for information number 1. For example, information number 1. What was information number 1? Okay, information number 1 is on purchase of PPE. So when you purchase PPE, 45,000, 24,000 using check on 1st of September. Look at the date closely. Why do I say look at the date closely? Because the company, if you look at information number 3 here, they depreciate based on monthly basis. So it is very important for us to look at when is the acquisition date, when you depreciate your asset based on monthly basis. So if you've done that, this is the one that were debited, yeah, the acquisition, the one that you debit, when was it? On 1st of September. Okay, 1st of September 19, debit. When you debit this, what you need to understand is that it will increase your PPE. It will increase your PPE. And this will affect your notes to the PPE. You are going to go and add in the notes to PPE, right? You're going to put that in the notes to PPE. How? We are going to go and include that in the notes, right? So you're going to include that in the notes. And this 45,000, 24,000 is the one that will be also credited to the bank account. So this will have to be adjusted in your current asset. Yeah. Okay, which is in your SOFP. So this one is just to give some idea of how to prepare. Okay, so you will do that. And then the second one, if you can see this one, you can do the journal first. and you can straight away go and post. So if you post, let's say for the information 1.1, which is on the acquisition. So if the effect here is in the statement of financial position as well as in the notes to the account. So we have one column here. If you can see, I have already included one column called acquisition. In the acquisition column, for the item that you purchased just now, I mean not just now, the one that you purchased on somewhere in September, right? That one will have to be included. 45,000, 24,000. If there was a disposal, it has to be also included here as your also item to be shown in the movement of PPE. But in our case, there are no disposal. There was just an acquisition or new purchase of asset. So the one that you purchase at the initial cost should be included or added to the cost of your PPE, yeah, or valuation of your PPE. Next, after you have done that, you have your information number 2. Information number 2, I will just focus on PPE for this session. Information number 2 is freehold land that was revalued. So when you revalue the land, what you need to understand is you need to go and check what are the fair value and what are the carrying value. Here the fair value, yeah, the fair value was how much? 2.5 million. 2.5 million. And you need to go and deduct the carrying value. Carrying value is the one given in the statement here because you are not informed any other details. The carrying value 2.1, right? Because that whole building or the whole land, sorry, was being revalued. So you have 400,000, and this is a surplus on revaluation. So this is a surplus on revaluation, and that will be credited to the asset revaluation reserve freehold land 400,000 and debited to the freehold land 400,000. So when this happens again, that will also affect your notes on PPE. And the ARR, yeah, notes on PPE, because that will increase the PPE. And this ARR, it will affect where? It will affect your statement of profit or loss, specifically your other comprehensive income. I put here OCI. So you're going to do that adjustment, as well as it will also affect your statement of changes in equity. Statement of changes in equity here means you're going to go and include in your revaluation reserve column this freehold land. Okay, this freehold land. Right. Let me just put this upward so that you have a better view. Okay. Okay, that one will be better. Right. So let's look at the PPE again, the notes on PPE, before we stop with our next presentation, which is our second part of this presentation. Okay, for the revaluation surplus, if you can see here, only freehold land is being revalued. If other assets are being revalued, you need to do the same. All right, that was the effect here. And another one would be in the other comprehensive income section here. Yeah, 400,000 as we put in our working. And one more would be here, which is under our asset revaluation reserve. Should we have, but in our question here, we also have some asset revaluation reserve balance that we earlier included. Okay, and there are no adjustment for depreciation for freehold land because freehold land is a non-depreciable asset. The next one is the adjustment on depreciation itself, which is adjustment number 1.3. For adjustment number 1.3, you need to go and do all the workings for your depreciation. So if you can see, I've already put the workings here, right? Which is for depreciation of building, that is using 2% on cost straight line method. For the depreciation on plant and machinery, it was 10% on cost straight line method. depreciation on motor vehicle is 20% on carrying value, implying using balance method. So the calculation is here for you to check. For the plant and machinery and motor vehicle, be extra careful because you have existing plant and machinery, which is from the balance that were being given in the question, balance brought down as per the trial balance. And same goes for existing motor vehicle. You have that. And you need to go and segregate between those two balances with the one that you acquired during the year. You can see my workings here. I've already shown you the workings. And be careful with the asset because they are using a monthly basis. So the proportion for the year must also be incorporated or included when you calculate the new acquisition or the new purchase of plant and machinery, as well as new purchase of motor vehicle, new purchase. So let me just use a different color. Okay, new purchase. Okay, new purchase. And this is also new purchase. Right. Okay, you will see the workings here will later be transferred to the working session in your admin and distribution costs here. All right. I will continue with that in my next video. Okay, just stay tuned. We will continue doing step-by-step workings for other items, but at the moment the depreciation should be able to calculate and segregate between, as I said, existing and new acquisition, especially for the asset that were acquired during the year. For asset that does not have any change, just go and calculate based on the cost or whatever carrying value where it applicable. With that, I thank you. See me in my next video for the second part of the discussion. Thank you very much. I'll see you when I will see you.